So in this live stream, I'm going to talk about a trade entry that I got into this morning and the reason I got into the trade as well. Thank you so much for your confirmation. So the very first reason why I was interested in this trade was something I saw on the dollar. So yesterday during the live stream, I talked about this key level right here, the inefficiency. And I said if we were to see any sort of rejection and for price to go to the upside, we will be anticipating for that to happen right here. And one of the reasons is because of this inefficiency. And the second reason is because of this candle without wicks. So candle without wicks has liquidity resting below it. So as you can see, price tapped into that key level. The next thing I did was to go to the 4-hour time frame, go to the 1-hour time frame. And on the 1-hour time frame, you can see we have a gap resting right here. You can see the gap between this high and this low. So this gap right here, I was anticipating to see price mitigate this gap, and look at how price came into it, mitigated it, expanded higher, didn't close below it, came back again, mitigated it, expanded higher again, showing me multiple rejections of that key level. So all I was looking for right now is the reason for euro US dollar to go to the downside, because I've seen reasons why the dollar should go to the upside, being number one, the daily inefficiency, number two, the 1-hour gap resting right here. So the next thing I did was to go to euro US dollar. And now when I went to euro US dollar, I was looking for confluences to align and show me that euro US dollar is going to go to the downside. And the first thing I saw right here was this inefficiency. So this right here was my drawn liquidity that I believe that should attract price to the downside. And then I saw this inefficiency resting right here. So the thing to understand is that the inefficiency serves as my key level, my point of interest. It also serves as my entry positions and also my exit position. So basically everything I'm doing is off an inefficiency. And look at how price tapped into this inefficiency. All I wanted to see from this key level is a 5-minute shift in market structure. And then we went to 5-minute time frame, and you can see it right here. We created a low, we created a high, and then we dropped, breaking this structure. The moment this structure got broken, this inefficiency right here is the entry. But to be most precise, this key level right here, this key level right here is where you anticipate for price to come into. Right here. And look at how nicely price came into that key level and displaced instantly. So this trade was really very fast. So if you didn't put in the trade, the exit second or minute that I posted it, you are most likely going to miss it. You're most likely going to miss it because it was basically the London Open, price spiked up, tapped into that key level and spiked to the downside, straight into that 1-hour inefficiency. So as you can see, is the 1:2 risk to reward ratio. 1:2 risk to reward ratio. So all we do now is to wait to see what price is going to do. Potentially, I'm still anticipating for price to still continue to the downside. I'm still looking forward to see this continue trending to the downside because this key level right here, 5 minutes. So we'll wait to see 2 minutes. So this is a low, this is a high, a break of structure, a retest. This right here could potentially be another entry if you want to sell more. But personally, I wouldn't sell it anymore because price has hit my target. All I do now is just to be on the sidelines and look for potential trades from other pairs because I've already made money trading euro US dollar this morning. And I'm still anticipating for euro US dollar to come to the downside. But I'm not going to try to get into a sell and hold the sell to run the overall sell side liquidity because in as much as I believe that's where price should be hunting for, there's no certainty for that to happen in the marketplace because everything I'm working with is a probability. So it's either going to be a higher probability or lower probability. So meanwhile, I'm still anticipating for euro to come into this key level This remains my overall drawn liquidity on euro, because I'm expecting price to form some kind of structure within this level. If we are to reverse for any reason, I would like to see some kind of structure created here, because this is the structure we're working with, this swing high and this swing low. So I'm anticipating for price to create another structure within this level. And then that will be basically what we're going to be working with. So that being said, that is my analysis on Euro US dollar. That's my analysis. And I'm not trying to get back in, but if I wanted to get back in, I would have been anticipating to get back in from here. And I'll most likely prefer to use here as my stop loss. And the reason I'm not going to use here is because price can still want to come back in here to run this liquidity. Even if it wants to go down, that's very possible. It can still want to come back in here to run this liquidity one last time, because we still have an inefficiency, remnants of inefficiency resting right here. So we're going to look at other pairs and see what other pairs are doing today. We're going to look at GBP US dollar. So for GBP US dollar, I was anticipating for it to run this buy side liquidity. This buy side liquidity was my target. I wanted to see price run this buy side liquidity, but as you can see, it dropped down into this inefficiency. And after dropping down into this inefficiency, I'm seeing this rejection. So price can still run this buy side. It's still not too late. It can still have an impulse move to run this buy side liquidity. So we're going to look at gold, and gold is another pair that I was watching as well. And yesterday I talked about this buy side liquidity on gold, and I said I'll be watching to see if this high is going to get taken. And if it gets taken, I'll be looking out to see a shift in market structure, because overall this is 4 hour. So I'd like to see a shift in market structure on 15 minutes time frame once price runs above this key level. Even though I wrote 5 minutes right here, but at the same time, for me to have a higher confluence on this trade, a 15 minutes time frame would be most appropriate. So if we go to 15 minutes time frame, we can see the low, the high, and eventually got broken. So the next thing we do now is, this was the last impulsive move to the upside before it dropped down to broke the structure. So I'm going to be watching this key level. I'm going to be watching this key level very closely. And if price comes into this key level and I see any sort of 3 minutes, 5 minutes shift in market structure, I'm going to look for sells, and I'll target the low hanging fruits right here. So you can see right here, we'll have this inefficiency right here. I'm going to be targeting that. So if I see a smaller time frame shift in market structure, if price comes in here, I'll look for a sell, and I'll target this key level. So let's say, for example, price comes in here like this, and I see a break, the retest, and this would be my entry. Take profit will be this low. As you can see right here, we'll have a relative equal low, and we'll also have an inefficiency. So this is what I'm watching. So hopefully if price comes into this key level and shows us a trade, I'm going to take that as well and also share with you all. So please, if you do get any trade ideas sent from me, try and make sure you enter it as soon as possible, because these trades are really going to be from the smaller time frame. And when trades are from the smaller time frame, it's basically the moment it's sent out, it's activating within seconds and few minutes, probably a minute or 2, 3 minutes. So after that, it's gonna be hard to get back in because it's already activated, because we're working with a smaller time frame. So when we're working with the smaller time frame, for example, we're waiting for a 3 minutes time frame to break. So once the 3 minutes time frame breaks, it's gonna take basically 3 minutes for the next candle that we are anticipating to activate us to form. So basically, we spend about a minute or two to type out the trade idea. So you basically have 1 or 2, 3 minutes in order to put that trade on. And if not, you're most likely going to miss it. So the market has really been lethargic. The market hasn't really been moving. So if we are waiting for bigger time frames to get into trades like 1 hour, 4 hour, you can basically see right here, we're on the 1 hour time frame. And we've literally been at the same point since. So this is on Monday. This right here is on Monday. And we've literally been here on Monday, and look at where we are on Thursday. We've literally been at the same zone all week. So if we were looking for a buy or a sell, we're waiting to use the 1 hour time frame, we'll most likely not make any money or even be in any trade. So now we're having to improvise and use the smaller time frame to enter trades, because the bigger time frames are not moving. They are really so lethargic. And this is just something that happens in the marketplace. There's nothing you can do about it. We don't control the markets. All we do is to participate and look for the best opportunities. And in cases like this, the market is not moving. For example, if we look at Euro US dollar, you can see that Euro US dollar, it hasn't really been moving much. Look at it. It's a very choppy price action. It's a very choppy price action. And if you're using a 1 hour time frame to trade this, you're most likely gonna be in a 1:1 max risk to reward ratio. That would be the best case scenario, which is not much. But look right here, you see how impulsive move. This is an impulsive move, and this is the 1 hour time frame. So if you were on a sell last week, that would have generated good profits because of this impulsive move. But we're not seeing any impulsive move this week. It's just choppy price action. So we're gonna have to improvise and work with the smaller time frame. And when we see trades on the smaller time frame, we're gonna have to send it out as a trade idea. So that is all I'm watching on the marketplace. So I'm still looking at gold as well. I'm watching this very closely, and if I see price coming to my key level and show me a 2 minutes, 3 minute shift of market structure, I'll look for potential trades on that. But if price comes in here and does not show that to me, then it means there's no trade. So the next one we're going to look at is GBP/AUD. So GBP/AUD, this was a trade I was going to send out yesterday to the members. Nuru talked about it and said I should look at it. And I looked at it. It was a beautiful trade. And I told Nuru in the chart that if I'm to look for anything on GBP/AUD, it's going to be for a buy, because number one, the interest rate on the pound against the Australian dollar is higher. So if you look right here, you can see clearly the interest rate on the pound is 5.25 and the interest rate on the Australian dollar is 4.35, which means the pound against the Australian dollar is gonna be bullish, right? Now, that being said, I'm looking at this, I'm seeing a structural low, a structural high, structural low, break of structure. All I want to see is price to come into this key level, inefficiency, inefficiency. This was the last down close candle before the impulsive move that broke structure. That is why you're seeing me market right there. So all I needed to see was for price to tap in here and break a 4 minute shift in market structure. And right here, you can see the 4 minutes shift in market structure right here, a high, a low, a break. This was the break of structure, and this was the retest. And then price came in again the second time. You can see this was 1:44 a.m. New York time, which was around 6:44 or 7:44. So I couldn't send this out as a trade idea to the members because of the time of day. But look at the trade we basically missed because of just not sending it out because of the time of day. We missed the 1:4 risk to reward trade. So if you risk 1%, you would have made 4.4% on your account just because we didn't post that trade due to the time of day. So we just have to make some changes, some slight changes. So basically, the trade must not come by 8 o'clock. It can come by before 8 o'clock, because that is when we see the trade. Because now we've missed this trade, there's nothing more we can do about that. It's now in the past. We have to move on from it. But if we keep waiting for 8 o'clock sharp to post that trade, we're most likely going to post fewer and fewer trades. So that is the reason we're trying to make some adjustment, just to make sure that everyone is happy, everyone's taking good trades and making some good money. So that is all I'm looking for. And for GBP AUD, I'm going to do more in-depth analysis on this to look for potential areas where we could anticipate to see price come back into, for us to potentially look for a continuation to the upside. Because right now we have this down close candle mitigated this key level. So let's look at 8-hour time frame. On the 8 hour time frame, the only thing I'm seeing right here is this inefficiency. And I really don't think price should come back in here, because this right here is a consolidation and also a retest. I really want to see an expansion for price to run this high. I really want to see an expansion for price to run this high, because this is a low liquidity. This high right here is a low resistance liquidity. So it's low resistance liquidity because this one right here didn't run above this one. If this one right here took liquidity from here and then dropped, it would have been a high resistance liquidity. But because this one came and failed to rally above this one and dropped, it means this high is a low resistance liquidity, and price can easily smash through these highs. So, but if for any reason we should visit into this key level, then I'll be interested in looking for potential continuation to the upside, even though I really doubt price is going to do that. But anything is possible in the marketplace, because this right here is also liquidity, and price could potentially want to run sell side liquidity one last time before a continuation to the upside. So I'm going to be watching this very closely. And if I do see price revisit that key level, I'll be looking for significant shift in market structure. And if I see that, then I'll be looking for trades, entries on GBP AUD. So if you do have any pair you want me to look at, please drop it in the chat and I'm going to look at it. So I appreciate you all for tuning in today. And until next time, I'll talk to you all later. Have an amazing day, everyone.